Today we have Pantera Capital saying the bear market is actually over. We have Citadel and other big players putting big money into Silvergate Bank. And then finally, Blur tanked 80% on Valentine's Day. How was your Valentine's? This is Around the Blockchain. I gotta start writing it down. I need to bring it up. All right, it's going to be a great episode. We have some great guests, including, a channel favorite. We also delegated him in the bottom right corner, but we're going to go ahead and start with Caleb Franzen on the top right. I say he tweets about inversions more than a yoga instructor. You're going to definitely want to follow him if you want to know about yield curves and just where macro events are heading. Caleb Franzen, highly recommended. Then we got TJ. He insisted I'm in the bottom right corner. I want to feel comfortable like it's the morning stream. TJ, how goes it, TJ?
Going great. You were cracking me up with that first joke. That was a good one.
All right. Then we got Arcane Bear. He just emerged from the TP with the shaman, and the shaman said where Bitcoin's headed. Maybe he'll share the secrets with us. It's Arcane Bear. And then if he looks familiar, it's because you recognize him from MTV's Silent Library, where he actually was a contestant, Jayson Casper. Jayson, I heard you guys won a little bit of money. Could you share some insight? What did you guys win on that show?
About $3,000, DZ. It was, at the time, the best day of my life.
Hey, it got you to that showcase, and that's what, it led you to this moment here right now. And if you appreciate that, please hit that like button. It's going to be a great episode, but let's talk about these whales getting bullish.
Wait a minute.
Go ahead.
How does he start with a 2-point head start? That's
I didn't do that.
He hasn't said anything yet. He's got
It's because I'm famous.
I was a big fan. I was a big fan of the show. I remember his episode. It had me peeling. So, I definitely remember that one. No, I've seen a couple episodes. I'm going to have to maybe try to find it. Let us know if you see it on the interwebs. Share it in the chat. That would be a delight. But yeah, we have talking about the bear market. Is it potentially over? I actually want to share this tweet because me and Pantera Capital called it about 2 days apart. My difference is I actually said this on November 14th of 2022, basically just saying, looking at previous cycles, we are kind of in the moment where a bear market bottom would occur. But now Pantera's Dan Moorhead and Wells Fargo think the crypto winter is officially over and has been over for months. They called the bottom, saying it was November 21st, and saying the bear market lasted a total of 376 days. I said it lasted 363. We're pretty close in line there. And they believe crypto is going to begin to grind higher. Now, TJ, this is a term I heard from you. Is what you call the 2-year slow grind. For those who don't know, what to you is the 2-year slow grind in comparison for the 4-year Bitcoin cycle? What does that mean to you?
Yeah, slow grind. I don't know if I said 2 years, but definitely slow grind the way I look at it. Really, I compared a lot to 2019, where we're in a really tight range most of the year. It's also known as like an accumulation phase of the cycle, where you've got a lot of time. It will grind. Like if you're talking about the 15.8, 15.5 range being the bottom, slow grind up to 20, slow grind up to 24, 25, and then it might stay between 20, 25, or maybe between 20 and 28 for most of the year, and then slowly move up. And then, I guess you could say 2 years because you grind all the way up to the halving, and then it starts to slow, it picks up gradually after the halving. And then really, a couple months after the halving, that's when the fun starts, mid 24, obviously into 2025. That's when we get, a lot of the top there. So I use a lot of my past experience to kind of compare cycles and what I've seen in 2019. And that's what I'm expecting a lot for 2023. And then obviously after 2019, halving came in 2020, and the real fun started 2020, 2021. And then we do it all over again, bear market 22. And then here we are back in that accumulation phase, slow grind up for 2023. And, I tend to agree. I think the bottom was in when we got below 16K after the FTX fallout. And yeah, I've been accumulating pretty hard. For me, anything below previous cycle all-time highs I see as oversold or good value. So, Bitcoin under 20K, Ethereum under 1,400. I was buying pretty heavily at those levels. And I'm here to enjoy the grind. It could get boring during these phases, but a lot of times you make that money when things are boring.
Yeah, that is the time to actually pay attention. And Pantera does have some credentials in the space. They've had a crypto fund since 2013, been operating it for 10 years at this point, and $4.1 billion in capital. And Arcane Bear, I believe we have talked about the cycle theory before. Just for reference here, the last bull rally, we actually gave back 136% of the previous rally, meaning we dipped below that 20K. Previously, we had never dipped below the all-time high. A lot of people thought it was going to be strong support. I thought it was going to be strong support. Were you surprised when we broke past the previous all-time high, which had previously never been done before? What were your thoughts when it happened?
Well, there was apparently an enormous amount of excess degen leverage in the ecosystem that I was just not aware of. FTX was a shining example of how things can go wrong in companies that look potentially functional from the beginning. Um, that I think changed a lot of people's mentality, and we had a lot of fear come into the market. For me, that represented most likely something, as TJ had mentioned, very similar to 2019. I've got something on the chart here. This 2019 period, we went through a small accumulation, just like this. We were tightly wound for quite a while, and we broke up to 13,000. So this drop down wasn't totally unsuspected. I figured we'd go down to 20, 28, 27,000. I thought that that would be the spring, but this really deep moment of fear here, I think actually shows a really nice accumulation range that has taken place. And I think that we hit that spring effectively right as FTX went down. And there's an enormous amount of supply that came into the market right here. And the reaction to that supply was very, very limited. So if you look at both the primary support and the selling climax, which are marked by these nice pieces of lightning bolt here, the supply signature that came in was lower than the spring, but had a much higher impact on the price. So both of these price spreads were much higher from where it fell down and here within the spring. So this is a really solid indicator, as far as I'm concerned, that we've hit the bottom of this particular trading range. We're going up, and we're going to continue higher. Now, if it's a similar analog to 2019, we'll go maybe upwards of $40,000 to $50,000 Bitcoin before coming back down and retesting areas with some type of fear built in. But this moment when FTX blew up and we had this massive amount of supply come into the market right here, this is what usually identifies a spring really strongly. So I suspect, because we've been in an accumulation range for already 270 days, if not the idea that this entire process from top here is also part of the accumulation range, which was very similar to what happened in 2017. In 2017, you had this large distributional period that brought us down to $3,500, but that just represented the first automatic rally. So this kind of basically represented the entire selling climax of this distributional period. So I figured that that's where we are today. We're at the full-on selling climax of this distributional period. We'll probably come up to around 50 to 70, and we'll probably form some type of accumulation range at the back end of Bitcoin over the next year or two before we go into a full-blown melt your face bull market.
All right, man, you're good with the trading view there. Very, very straight lines. I could tell if that was Homer's sideburns or Charlie Brown's sweater, but I got squiggly lines everywhere. Looks like Earthworm Jim or something. All right, well,
doesn't need to be exact. Yeah,
oh
just
no,
rough
you're on point.
ranges when you're dealing with
laser precision there. All right. Well, Caleb, I know, you look at a lot of macro factors, 10-year yields, 2-year yields, you're looking, possible things looming with potential conflicts overseas. But what do you think about the big money players in the crypto space essentially confirming a bear market bottom in their opinion? I mean, does this change your opinion on whether or not we head lower than 16K? I mean, does this act as anything in the weight of Caleb Franz's scales when it comes to his opinion here?
Look, I have a lot of respect for Dan Moorhead and Panthera Capital, so definitely worthwhile to listen to their opinions on things and take it with a grain of salt at the same time. But for me, whether or not the lows are in is kind of a moot point. I don't mean to disregard the question of are the lows in, but it's hard for me to say. I really don't know. We've never been through this historic of a tightening cycle where we've seen the federal funds rate accelerate by this pace. I've been in the markets now for 9-10 years, studying macro and markets and history, the whole 9 yards. And so for me, this is a really kind of unprecedented time. In a lot of ways, I feel like the rally that we've had across kind of the entire risk asset market, whether we're talking about equities or even crypto, this has been, in my opinion, somewhat of a blessing in disguise to get this ability to de-risk our portfolios, raise cash once again, and hey, maybe immediately start DCAing that cash back into new positions or long-term core portfolio holdings. And so that's what I've done. I mean, it's hard for me to know where this shakes out exactly. It's been an epic run. I've done 2 really solid studies that have essentially shown that, we've had somewhat of a bottom signal here. And we've kind of left this new accumulation zone. I actually just posted a YouTube video about it today, so check that out, Cubic Analytics on YouTube. And looking at things like the Heikinashi monthly candles, after we've had at least five consecutive red monthly Heikinashi candles, and then we get a green candle, that's marked the end of each bear market. We recently had that for the month of January, so great sign there. But I still don't necessarily think that we're out of the woods yet, because again, the Fed's playbook is very simple. It's very consistent. They raise rates very late into a credit cycle. They keep them too high for too long. They create a recession, and then they try to get us out of that recession by dropping rates back down. So my prediction for 2023, as I outlined in my outlook, is that we're likely to have a recession this year. We could certainly avoid it. I could be wrong in that assessment. But I certainly don't feel the need to be taking on excessive risk, especially after we've gone on such a considerable run, right? And we have stocks like NVIDIA that are up more than 100% from the lows. We have Carvana. At one point, the stock was up 280% year to date. It's obviously given back a lot of those gains, but we've had a lot of excess and exuberance in the market, and markets can stay irrational longer than I can stay solvent. So I'm not necessarily fighting the trend, but I'm not chasing it either.
All right. So not sure if we're out of the woods yet so far. Is that what your assessment is here? All right. Well, we can only be halfway in, so I'm going to try to remain optimistic here. Well, Jayson, I know you're more of a TA guy. You saw Pantera. Maybe you're thinking of Dimebag Dirt, but no. Of course, it's Pantera Capital, also a respected organization. Right. Not as respected as Pantera, the band, but definitely up there. So what is the TA telling you with that monthly in particular? I mean, are you looking at that monthly on the Heikinashi and saying, hey, maybe there is something there? Because I have heard from you, we could be going lower.
Right. Well, DZ, I do believe that the bottom is in, but I don't necessarily, I wouldn't say that the lowest price is in. That's up for debate. But if we do take a look at the monthly time frame, there's one thing I would say for sure. For the past 3 market cycles, I'm going to pass 2 on this chart, but for the past 3, we have always bottomed out in between the Fibonacci 786 and the Fibonacci 886 level. And actually, if we take a look at where this halving lines up, the white lines are 1 year before the halving, and we always bottom out before 1 year before the halving. And when 1 year before the halving happens, Market Cipher B also prints a green dot below the 0 line on the monthly for the past 3 cycles. Something else I've been looking at is the stochastic RSI in the monthly. Every single time we get the green line crossing above the orange line, it's happening right before that 1 year to halving. And so we're printing all the bottom signals right now. And I also have some other fundamental reasons as to why I think the bottom is in, at least in the cycle, right? Because we have to understand also that we've had double bottoms pretty much, as TJ was talking about the slow grind. We pretty much always have put in a double bottom after the real bottom is in. We get a relief rally, then we put in a double bottom, giving back almost everything. So there is still the potential that we could come down. But I would say for right now, for me, as everyone else has been saying, this is definitely the zone to be accumulating for the next bull run. And when I saw that we were coming down right here, this is in November after the whole FTX thing happened, when people were wondering what was going to go lower. I've pretty much been bullish since we came back down to retest this value area low, basically showing the market did not want to trade Bitcoin at a lower price, right? I actually gave the trade setup in advance in my Discord group, because when we were coming back down to test this key zone of support right here, we saw Market Cipher B was actually, the money flow was coming higher and the momentum waves were coming higher. Looking just like Sam Bankman-Fried's chest, as a lot of us are well aware, but his man boobs were getting higher. See, he caused the dump, but he also brought us out with his beautiful breasts of juicy goodness. So I do think that the bottom is in here, but if we get a lower low, which has happened sometimes in the past, it wouldn't surprise me. So I know that's a little ambiguous, but I do believe that the bottom of the cycle is in.
Hey, I'm just glad you weren't silent on that, because that was definitely a library of information. Always got to check out Jayson Casper's trade group. They're putting out really, really good stuff. All right, well, let's talk about the big VC buy, and I'm talking about all this money pouring into Silvergate Capital. According to this is a new filing with the SEC. Billionaire Ken Griffin's Citadel Securities just to close a 5.5% stake in Silvergate Capital, worth about $25 million. Citadel disclosed it bought 1.5 million shares in December. There's a lot of other money, pouring into this company. We have, Citadel, just to name a few. Ken Griffin coming in. Silvergate stock, though, does not look pretty. I pulled up the stock here. This almost doesn't even show it. You would almost think this is, we need to make it logarithmic. This is a high of $220 and now all the way down to $17. And if we just go, this is just the past 6 months, a lot of downward pressure there. You can just see it just kind of just bleeding and heading down and to the right there, even on the 1-year chart. So not the most bullish action, but a lot of big money starting to pour into this. Now, Caleb, you say you've been following the markets for a while. There's some smart money pouring into Silvergate right now. I mean, is this a flash in the pan? I immediately thought of Warren Buffett buying Bank of America stock. Is that too far-fetched? Is that not enough of a comparison there?
It's an interesting comparison. I never thought of it that way. Possibly though, right? The thing I would like to say on this is, look, I worked in commercial banking and corporate banking for about 2 years. These guys are sharks. And so, they don't like to lose, and they hate to lose more than they like to win, is how I would describe things on Wall Street generally, right? So banks especially, they don't lose. And with all of the extremely negative sentiment around crypto, around Silvergate, all the cloudiness around the involvement with FTX, and what's happening with Grayscale, and this whole aspect of contagion. This is when banks and financial institutions step in with size to take advantage of negative sentiment to get top dollar on a potential deal. So I guess in retrospect, I'm not surprised to see this. And because if they do lose here, they'll probably lose very little in the grand scheme of things. And the upside is potentially massively skewed in their favor. And we have to think about Citadel, Ken Griffin. This guy's like an absolute legend on Wall Street. And, you probably don't want to bet against him, is what I would like to say. Ask the GameStop guys how all that stuff worked out, so on and so forth. It speaks for itself, right? These guys on Wall Street, they do not lose. So look, if you want to take a flyer on SI, be my guest. We've seen this very weird dynamic where companies file for bankruptcy and it's like the next day the stock is up 30, 40%. So, bad news is good news sometimes in the stock market, especially when you got these sharks kind of in the background.
Full disclosure, I YOLO'd in at like 10:30 a.m. I was up 12% at market close for a stock. I just couldn't even believe it. I was like, wait, not 1.2%, 12%. This doesn't feel right. TJ, why do you think they're buying into this bank? Do you think that they know something that we don't know? Or is it just for the overall health of the crypto economy? Because, they like the cypherpunk ethos.
Yeah, they absolutely know stuff we don't know. That's what their job is. Real quick, though, before I get into that, I wanted to say, +1 for everybody in the chat, or all the guests here today. Really good information there. I liked what Caleb was saying about Pantera. You have to respect them because they got a lot of money in the game and they put their money where their mouth is, generally speaking. But you got to take it with a grain of salt because, a lot of times I'm a big fan of watch what they're doing, not what they're saying. A lot of times there's a lot of misdirection with their words. And I think it's very similar when it comes to the Silvergate stuff. If you guys haven't checked out Blockchain Basement, that's the channel we run right after the BitBoy live stream. We actually got into a lot of this about Silvergate early on there. For those of you who don't know, Silvergate started 2013. It banks basically every large exchange in the crypto industry. Silvergate is 100% tied to the crypto industry and has been for a very long time. They were extremely wrapped up in this FTX stuff. When they had those massive withdrawals, a lot of that was coming from Silvergate Bank. A lot of the withdrawals, if you guys remember SBF talking about, we met, I think it was $8 billion worth of customer withdrawals on one day. All of that was flowing from capital from Silvergate Bank. They had to sell a lot of their real estate assets and holdings because of that to meet those demands. Now, they didn't go insolvent like FTX did. They were able to meet the demands based on what was on the books. However, it put a huge beating on their earnings, basically wiped out all of their profits they've had since 2013. That being said, if you look at the design of the bank, the way they make their money, it's designed to do well in high inflationary assets and high inflation rate assets, just like most banks. But this one, because of the way they bank, it actually has a few more different advantages than other banks. So Silvergate has always been part of the crypto industry. But you have, yes, they know things we don't, and you have to be careful with this because a lot of the squeeze that is happening on Silvergate Bank right now is coming from some of these other players in institutional finance, some political figures. A lot of the stuff that you've got Deltec and you've got Silvergate. That's basically the only on and off ramp banking rails for the crypto industry, both under extreme regulatory pressure right now. And you look at who's behind some of these things. I started paying attention when BlackRock started buying Silvergate. He mentioned Ken Griffin. I don't know if I would call him a legend as much as a titan. You look at some of their numbers of what they're doing, it's very similar, in my opinion, to what, and I'm talking Citadel and the different businesses they own. Ken Griffin, one guy running a market maker, running a hedge fund, running a dark pool. Last guy who did that, and extremely beating the market by insane margins when everyone else was losing. Last guy doing that was Bernie Madoff. So again, take that with a grain of salt, but you got to watch what these guys are doing very, 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 very closely. And if big money, yes, they're smart money. Yes, they fight dirty, and that's usually using information other people don't have. That's using political influence other people don't have. So you watch the money flow, and if big money's flowing into that, wouldn't surprise me to see Silvergate do extremely well over the next 10 to 15, 20 years as the crypto and blockchain industry continues to grow and expand to global reach, far beyond probably what a lot of us are imagining right now. With that being said, it's probably not going to be something that, sees insane recovery tomorrow, but it's extremely tied to the crypto industry. So if you believe in crypto and you believe in blockchain and you don't think they're just going to regulate Silvergate into the ground and build up their own thing, might not be a bad play.
All right. Well, Arcane Bear, kind of on that point, are they going to build it up or will it be its own thing? Arcane Bear, is it possible that Silvergate is maybe the thing? Is there any kind of Trojan horse fears that you're worried about here where, yeah, it's the fiat on and off ramp for now, but maybe, some legalese starts changing. Maybe some websites start changing, maybe some public facing PR comms start changing. Is that a worry of yours, or is this seen as mostly just bullish to you?
Well, this is a larger context, I think, around the conversation for fiat on and off ramps. With Gary Gensler kind of focusing attacks on the Binance stablecoin and other off ramps for Binance recently as well. There's a big question of who do you bank with, especially if you're a U.S. citizen. So Silvergate, having been accumulated by BlackRock and now Ken Griffin's fund here with Citadel, would lead me to believe that they know something that we don't, and that they're looking to invest in a bank that already has a charter with this kind of focused crypto development, with the understanding that crypto is probably going to take off, and they need banks that have on and off ramps that are properly managed. Now, I'm not a huge fan of regulation. At the end of the day, I think it largely gets in the way. But here, I think the idea of a regulated bank for crypto makes a lot of sense. There are other banks like that outside of the United States that you can bank with. But there's nothing really in the USA that does great for that. So if they're able to take over and have a solid banking case there, probably a pretty valuable play. I just read as well that Soros took a $2 million option put against the price. So you've got big players sitting in both directions. Ultimately, I think it's something that's slow to move. You talked about $25 million being, it's an insignificant sum of capital for Citadel. So for them, as was pointed out earlier, there's basically no risk for them. They could take a $25 million loss and not notice. In terms of venture capital, there's a million more exciting things out there in terms of growth. So why they would want to take that risk for a banking company that's maybe being probed by the SEC it's hard to understand, but their due diligence teams are bigger than mine, but it's not something I'm extremely excited about per se. It doesn't bring any new value into my life.
Yeah, I think the assessment, they probably know something we don't know is, probably accurate. Before I go to Jayson Casper, I might ask you about SI stock. I want to show these Zero Hedges tweets. I thought this was just great because you brought up the short. 8 hours ago, Citadel Securities reports 5.5% stake in Silvergate Capital. 4 hours later, Soros Fund Management discloses bet against Silvergate shares. Perfect. So yeah, just like you said, two big players on either side of the arena here. Now, Jayson Casper, Caleb might disagree with this, but BlackRock is in, Citadel's in. I see a local low. I'm YOLOing in. It seems like a perfect, foolproof strategy. But what does the TA tell me? I mean, this has been beaten down heavy over the last 6-12 months. I mean, is it starting to coil for a direction?
Right. So I'm a big TA guy. I believe fundamentals play a role, but I'm a big believer in show me the chart, and I'll tell you what's going on. It is interesting that you've got big players like Soros now betting against these guys. But if we do take a look at the chart, like you said, this thing has been pretty beat down, right? We're pretty much back down at the low, right? Period.
What date is that, by the
And
way?
if
Did
we,
it IPO in 2013?
yes, this was back. This is 2019.
19.
Okay.
Okay.
Right here that we're looking at. Yeah. So yeah, that we got on this chart here. So if we just take a look, I really just want to focus on basically what's happened in the last few years. So if we look at this downtrend, we pretty much have no volume that traded right in this zone. So what that means is if we're going to get a move up, it's going to be a very swift move up. Like we could very easily right now just come up another 200% and just test this support resistance flip, because it will, smooth move down, smooth move back up. Like I always talk about, that night you went out partying with your friends in college and you ate like a whole bunch of Taco Bell at 3 a.m. It was a very smooth move down. Well, the next morning it was even smoother coming back up because there was just no volume there. And when we do look at, the oscillator, we do see money is coming back in here over time. We see bullish divergences. And to me, if, I'm not invested in this at all. But the way I like to accumulate assets is when I see it's been beat down, and when I see there's a lot more upward potential than downward potential, and I see there's bullish divergences, it just makes sense that some upside is in store for us after such a huge beatdown like this, especially since, the whole Taco Bell thing, smooth move up, smooth move down. So
all right.
that's how
Well,
the
that
chart's
takes us
looking.
to our sponsor. If you want some smooth moves when you're sending your crypto, presyn.io. Make sure you check them out. Links in the description. And BC Vault helps store your crypto. Now, Caleb, I was kind of mind reading. I was speaking for you. Is it a bad strategy to just copy trade BlackRock and Citadel when you see a local low?
No, but why not just buy BlackRock stock? It's at a
Oh, man.
discount as far as I'm
No. Don't
concerned.
hit me with logic and facts and reason, Caleb. I mean, I guess that's what you're known for. All right. I'll give
They
you a
pay a
point for that
solid
one.
dividend too.
Oh, God. Now you're speaking my language here. It's been a while since I started looking into dividends, and I'm starting to look again. Well, speaking of dividends, the Blur airdrop paid dividends. If you traded it early, that is. We're looking at the stock right now. It keeps fluctuating all around. Right now, hey, guys, it's just down a casual 98%. It's okay. Nothing to see here. Do not worry. Maybe that launch price was a little bit high there. I was in the midst. I had, full disclosure, I had about 35 Blur tokens to claim. Seemed great at $5. I was just going to sell it $150, $30 gas fee. But then by the time I could trade it, it was worth about $25. And then the gas fee had jumped to $50. Taco's gas fee, $69 there. So the Blur's been quite the roller coaster of emotion here. There's a lot of traders out there who have claimed a lot of money. Not open for American citizens. I did a quick trip to Arcane Bear's house so I could claim that, and I just got back just in time for the show here. But yeah, it tanked. You see there 98%. There's also a lot of questions about the wash trading. There's questions about the geolocation. There's questions about, not announcing anything, ahead of time with the tokenomics. So there's definitely a lot of criticism heading their way. TJ, what were your thoughts? Because typically you see an airdrop. Typically it goes down on launch. So, was this a failure to you? 98% is kind of a lot, though.
Like you said, we see things drop a lot on launch. I would imagine a lot. I don't know what the pre-sale numbers were. I don't know what the VC money is. And again, this is VCs taking advantage of retail. It's using their position, using their prior knowledge. I would imagine. Like I said, I don't know the details on the pre-sale, but usually when you see a drop like this, that means there was a lot of the original investors are the ones holding most of those tokens. It's not retail dumping the airdrop. That's actually the inverse to get more retail in. To incentivize retail to get involved so that way they can be the exit liquidity. And that kind of tends to be a general theme today when you guys are talking, about Soros going short and BlackRock going long. Like, if you guys don't think these guys might be competition, but they're also, they know each other. They talk to each other. And, if you don't think they work together to continue to help themselves profit, I think that's just a little bit naive. That happens obviously same in the crypto space. If you're talking Pantera, if you're talking Jump, if you're talking a lot of these big VC funds, they're going to continue to work these markets to the best of their ability, especially in a bear market. Animoca, all of these people. I don't know if by the way, I don't know if any of these VCs that I'm naming are necessarily involved in Blur, but I do know a lot of these firms got hurt pretty badly by what was going on with FTX and Alameda and everything wrapped up in that 3 Arrows Capital. They get very greedy, and when they kind of got caught with their pants down a little bit, and they're in survival mode. So when I see something like this, I see VCs generally doing pretty well on it. The token could, this doesn't necessarily speak for the platform, for the technology. I haven't used Blur as a platform, but you do need to keep that in mind when you see, as soon as a token comes out, that it dumps like that. Generally, these are people that have the tokens far in advance, and they've been waiting for this day for a very long time. They dump immediately, and they're still up, 10, 20, 50, even 100x sometimes, even at the price that it is now. So they're happy to dump that, watch it go from $5 to 60 cents, let retail pile back in at that number, drive it back up. They'll dump it on your head again. And so this is just something you have to be careful with and be wary about. The tokenomics always matter in projects, so you should always be looking into who owns it, what are the allocations, how much is going to the team, how much is going to VCs, how much is going to development, all that sort of stuff. And if the numbers seem out of whack to you, you need to trust your gut. That's one thing I've learned over my time in the space, and this is something I would implore any of you watching right now. Yes, all of these guys here, and not taken away from myself or anybody else on this channel. A lot of really good information, a lot of really good charts and analysis. They assist you in gathering data and information for you making your own decisions. But at the end of the day, you need to decide for yourself. You need to use your own gut. And that was one thing I learned through my journey in crypto, that, hey, my gut's pretty good. Like you hear, somebody saying one thing, somebody else saying something else. But at the end of the day, if I put money where my convictions are, it's paid off for me. And I think everybody at home, you guys should be thinking the same way. Take this information in, process it. Does it make sense to you? Great. Then you can take action based on what you think makes sense, not just follow blindly what the trends are. So that's just, my little rant for the day. But something to keep an eye on. I'm sure it will recover somewhat, if the platform is being used, if the volume is there. And I know volume is coming back to NFTs right now. We've seen a big spike in NFT volume in Q1. It's definitely holding a strong interest. I don't think it's going anywhere anytime soon. But when it comes to tokens and airdrops, like you said, they almost always dump as soon as, again, it's supply and demand. Once you dramatically increase the supply of something, what do you think is going to happen?
Yeah, it's free money at the end of the day, too. So a lot of people treat it like that. All right, well, Arcane Bear, I looked at their numbers. They had 146,000, almost 150,000 wallets trading in the last 4 months. They have very respectable volume, a strong number 2 competitor to OpenSea. But I want to ask you about this as a strategy. Do you think that the Blur airdrop, did this help or hurt the marketplace's chances of survival in the long term?
Well, I don't know a whole lot about Blur's history, but from what I do remember, they raised their kind of first round from Paradigm, Ledger, and a few angels. So FTX was not on that list, and they did it through the Blur DAO. So as far as I know, a lot of that was done in a decentralized raise, which is not something you see frequently. Often it will be closed door raises. You're not able to participate. So I do believe that if you were able to get on some of these boards, you were able to raise within the DAO. I think I forget the name of what it's called. It'll probably come to me in a minute. But you were able to invest in this as an average participant. But Paradigm led that round. I think it was $11 million they raised at like a $300 million valuation. The current tokenomics circulating supply is 360 million tokens, 3 billion in total, with a $228 million market cap at the current circulating supply. So that would put it at around 3 times cheaper in market cap value from the tokens that were launched. Now, from what I understand, Blur is a great platform. I'd use them for looking and following a bunch of NFT data. I like them. I think they're enjoyable. Now, one of the, I think, things that's important to recognize here is that if you're dealing with asymmetry, you are often going to have 80% downward spirals. And you might 2 to 3 years down the road have walked away from 100x or a multiple 100x. And we've seen this before. CryptoPunks were effectively free to begin with. So when companies do airdrops, aside from selling right away to take advantage of that, which is usually a good idea, as TJ pointed out, if you have a whole bunch of new supply coming into the market, which was free for most people, a lot of people will take that profit. But the difficult part is measuring out into the future and whether you may have walked away from an extraordinarily successful, basically free investment. And I've seen that countless times in this ecosystem where we end up walking away from asymmetry far too early, looking at it's like, oh, well, it's only worth $350 today. But if you reversed 7 years ago and have $350 in Dogecoin, it's worth a hell of a lot more today. So that time and asymmetric functions is always difficult to keep in mind. And as someone who's a big fan of venture capital, that's always what we're looking for. Is that have you seen large retracements in the price? How does the price match its regular fundraise? And what is the company's average valuation? It's probably pretty close. So I think that Blur's got a lot on the table for technology. A little bit of an argument around the creator royalties, as far as I understand. But ultimately, when things like this happen, what people should be interested in is learning more about the technology. DZ, you had mentioned you got an airdrop from playing around with Blur and learning. I got the same thing from ENS domains and Uniswap tokens. And although the tokens do come down in price at first during this market cycle, we have no idea where they're going to be next market cycle. And that's usually when people go, oh, wow, if I'd only kept the $500 worth of X thing, it would be worth way, way more. And it's always a really difficult conversation. So, well, do I take this basically meaningless profit today, or do I walk away from it and check back 5 years from now to see how that's done? And that's usually what I try to lean into, is that long-term time horizon for these asymmetric bets with this technology, because that's what's performed the best over time, rather than like, I'm going to exit today, I'll just walk away and I'll come back to 5 years from now and see if we were right, or if we just went to zero effectively.
Yeah, I want to touch down on that point. When you feel strong conviction for a protocol, you feel like it is a good play, you feel like it has longevity there, sometimes it is worth to, maybe not sell everything. Uniswap, BNB, you brought up some pretty good ENS. That one did take a tanking, but Uniswap definitely performed pretty well. And when you're saying, you might sell too early, you just remind me of 2020 and all that chain link I was selling. I thought I was so smart. Well, Caleb Franzen,
Yes.
I want to...
So difficult.
Yeah, it felt, hey, I'm up 100%. I got to take profit, right? Caleb.
Yeah, I'm doing the smart thing right now.
Yeah, it's what I'm supposed to do. It's what the smart people would, encourage me to doing here. Well, Caleb, I want to ask you about the NFT marketplace ecosystem in the future. I kind of see two directions. It could go in the direction of tech, where you're going to see a lot of, I hate to say it, monopolies and duopolies. Google search, Android, iOS operating systems. There's, people usually just use Airbnb. Are we going to head towards a monopoly, duopoly structure as OpenSea adds more chains? Or is this going to act more like crypto coins, where, maybe there's 1,000, marketplaces, and maybe, 50 of them are kind of worth their salt? What of those two directions do you see the marketplace ecosystem heading?
For NFT platforms in general, I think I lean a little bit, and look, I'm not an expert in this space, but I think I lean a little bit more towards it being kind of a monopolistic duopoly kind of environment, simply because in tech, you really do have first mover advantage, right? So, like, for example, Zoom, right? Like, even if I'm on a Google Meets or something like this, I just tell people, yeah, I had a Zoom call, right? And obviously, Google Meets, Microsoft Teams, Slack, there are all of these different new methodologies for, using technology and innovation for our own services. But nonetheless, those first movers always have a massive advantage. The same way that, if I take a lift somewhere, I still say I Ubered there, and I use them both 50% of the time. It just depends. So first movers advantage is certainly an actual thing that's going to take place in tech. I don't think it's going to be something like the overall kind of crypto environment where you have 20,000 different cryptocurrencies, whatever the actual number is today, right? Because I don't know, there's a lot of money grabbing going on in the crypto space with just these random projects coming out of nowhere, out of complete left field. But there are, a handful that are actually really trying to build a new, interesting version of technology, a different type of platform, a different type of network, a different type of use case. With simply buying NFTs, it's an exchange at the end of the day. And oftentimes with exchanges, you really have a consolidation of volume with the top dogs, right? So like it's like Binance in a lot of ways, right? Like Binance is essentially the exchange. So regardless of what's happening with Kraken or BitGet or whatever the case, like it's relatively insignificant relative to what's happening on Binance. So I feel like that same kind of look, full transparency. I'd never even heard of Blur until you guys sent the potential questions and topics for today's call. So this is news to me. Shows you how much I know about the NFT place. But yeah, that's my quick thoughts.
All right. Well, hey, the gas fee didn't even cover what I earned, so you didn't lose too much there, Caleb. I think you're going to be able to sleep pretty easily tonight. TJ, did you want to add something real quick?
Well, no, yeah, I mean, I agree with Caleb. Generally speaking, tech obviously it can have a network effect, a snowball effect, especially like when he referenced Uber. But I typically tend to think markets, especially when you're talking platforms, you're going to have kind of 3 to 5 viable players. I mean, because there was plenty of things that came before Zoom that, Zoom maybe has the tech advantage now, but I can't even barely remember the one that was
Skype.
Skype on Microsoft TeamSpeak I used to use all the time. And now Zoom and Discord and a lot of these there was plenty of other chat things that existed before Slack did. So, I mean, I understand what he's saying. Yes, it does have a network effect and a snowball effect, but I generally, I think, yes, Binance has far and away the largest volume. Coinbase still a very valuable company. Kraken's still a valuable company. So I generally, and it's going to take time, right? In tech, we're extremely early. We're talking internet, maybe late 90s, early 2000s, maybe some would argue earlier than that, where a lot of these things will come and go very quickly. And eventually, and when I say eventually, I mean over the next 10 to 15 years, the market will settle on 2, maybe 3, winners in any certain category. But in my opinion, it's not necessarily winner take all. It's not even, Google, you look at Google, you look at Amazon, those are some of the big ones that, are kind of, Meta and Facebook, but, MySpace and Zynga and a lot of things came before Facebook did. So I think maybe he was referring specifically to like that astronomical tech breakthrough that really changes everything, whether it's a programming language or how they're actually delivering the data. But the concept itself, NFT trading, NFT marketplaces, I think there's a lot of room for innovation as that moves forward and for really across the entire blockchain industry, in my opinion.
Yeah, I agree with you too. I think Metcalfe's law is just too hard to overcome. That just says the power of a network is equal to the number of nodes squared. That's a different topic there. But all right, Jayson, I want to talk to you about the Blur chart here. I don't know if it's on TradingView yet, but I'm looking at this limited amount of data I have, and I'd be danged if it doesn't seem like it found somewhat of a floor here. It doesn't seem like it wants to go below 50 cents. We always talk about those psychological levels. Is there a floor for Blur, or is it just too blurry because it's so new?
It is a little bit blurry, DZ. That was a nice pun there. It made me chuckle. I mean, we could take a look at the chart here. I mean,
I'll take just a nostril exhale at this point. All right. There we go. There we go.
The daily chart is looking, pretty nice.
Let's go to my favorite chart, that 1 minute, or the 5 or the 10.
Let's take a look at the 1 minute. I mean, so here's this thing. We can't take this seriously at all, right? But we are forming some kind of a bottom here.
Is that a head and shoulders?
At the Fibonacci 618.
Confirmed head and shoulders, right? Is that a confirmed head and shoulders?
It does look like a head and shoulders as well. So if this is going to be a head and shoulders, then that would make our that would mean we're going to come down another. Let's see. We'll come down another 30%. So yeah, that's about all I had to say about that.
All right. Well, just general advice for maybe people in your Discord. Hey, Jayson, I see some opportunity here. I mean, what would you recommend to the degens who just can't stay away because it's the hot shiny thing?
I mean, if you're into NFTs, and you know what you're doing, then by all means, go for it. But if you're trading, if you're leverage trading this, I would stay far away. There is no way to get any kind of real technical analysis on this asset when we have one doji candle on the daily time frame. So please. Unless you're an avid gambler and you enjoy that, please stay away from an asset like this if you're going to be trading it.
All right. Well, you can't trade on KuCoin. I don't know if they have the 5X open yet, but I mean, hey,
I think it's on a few exchanges right now.
Yeah.
So
they had a pretty decent launch, all things considered. Yeah, please be careful out there. Well, that is all we have time for. Arcane Bear was going to take it. He was going to show his trophy to a shaman, but then TJ came in and said, I need to add an extra point on top of Caleb's here, and ended up just siphoning away the victory there. So TJ, feel free, leave us with some parting thoughts.
Yeah, I wasn't trying to do that. Also, shout out to the person in the chat that told me right now at the very end of the episode I had the wrong mic connected, so it probably sounded not that great. But really enjoyed being on here today. Like I said, if you guys have a chance, go follow every single one of these guests here in the chat today. Really good alpha. I'm sure you could learn a lot from all of these guys. If you have time, Blockchain Basement, we go live 1:15 every single day. It's a little bit more laid back style. We cover the news. We cover maybe some degenerate picks. We goof off a little bit down there. We talk about crypto. We maybe talk about some things that aren't crypto as well. So that's my plug for the day. Also, it's Valentine's Day. Let's not forget that. Hopefully, if you guys do have somebody else out there, send them some love, give them a hug. Call your mom, text your mom. I'm sure she'd really appreciate it. And hey, shout out to Bitcoin. Everybody loves Bitcoin. So thanks for having me on today, and we'll see you guys soon.
Yeah, give us one of those Valentine's Day likes. We'd really, really appreciate it. It was a great episode. I think we had a spit take. We had a fun hidden fact by Jayson Casper. We had Arcane Bear on. We had Caleb. We had the rare TJ appearance. I think it was a great episode. So please hit that follow, hit that like button, and make sure you check out everyone's links in the description, including our sponsors. Until next time, Bit Squad, easy out.